Hi everybody, this is Property with Leonard and welcome to another episode. Now on this channel we discuss property, finance and investments. Now please note that none of my videos constitutes as financial advice, but if you're looking for financial advice, please speak to an accredited and registered financial advisor. Now today's episode is one of those 6 of the one or half a dozen of the other predicaments, and that is, should I or shouldn't I fix my interest rate? That is a question that a lot of clients pose to me over the years, and more so because of the dramatic reduction in interest rates since January last year, 2020. And I think the interest rate has dropped about 3% since January 2020. That's last year. We're in October 2021 now. And this has sent many borrowers running to the banks in pursuit of a fixed rather than variable interest rate. And I'm specifically referring to home loans and other debt, of course. So in this video, I'm just going to explain to you what is meant by fixing your interest rate and how it will affect you. And I mean by you, I mean your pocket, of course. But before I get to today's episode, let us just go through the formalities, everybody. Because according to my channel analytics, about 70% of you watching and looking at me right now, you have not subscribed to my channel yet. And the funny thing is, you guys watch about 80% of the video. That means if I record about a 10-minute video, on average, according to my channel analytics, you watch about 8 minutes of my videos, which is really great, and I'm grateful for that. But I kindly ask you, seeing that you do like the content, if you haven't, to please subscribe to my channel, to like this video, and to share it. And very importantly, 2 things. Subscribing is free. It doesn't cost you a cent. And secondly, it is really easy. You can just click that subscribe button in the bottom right hand corner of your screen. And please remember to hit the all notifications. And that's so good because that way you won't miss out whenever I upload new videos. And I really want, my channel, this Property with Leonard channel, is there to help you make informed financial decisions. As you are all aware, the economy, specifically in South Africa, it remains under pressure. It makes sense then for the South African Reserve Bank to support investment through the accommodative interest rates, the low interest rates. Now, it is possible that inflation will trigger an interest rate increase in the near future, but realistically, I don't see this happening too soon, but it is coming. The reason why people fix their interest rates, their hope is obviously to be able to keep their monthly repayments at the current low levels for at least the next few years, even if the Reserve Bank should start to raise the interest rates once again. And that said, there are several problems with this strategy. The first being the most obvious one, that banks will charge borrowers a premium of between 1.5 and 3%, and it might even be higher than that. And it will usually require that you do so, that you fix it, for at least a period of 2 years. The reason for this is that when you fix your rate, you are effectively asking the bank to take over your risk of future fluctuations. So if you are currently being charged the prime rate of 7.25% on your home loan, for instance, and the bank raise your interest rate, if you fix it, now that you want to fix it, they will most probably raise it to 8.75% if you want them to fix it now, say for the next 2 years. So that is a 1.5% increase, which is the minimum that the bank would most probably agree on. This means, just to use an example, if you have a 1 million rand loan, you will be paying an additional 934 rand per month on your home loan. That 934 rand that you pay extra now or more, you will effectively be wasting that money, if you understand what I'm saying, unless the prime rate or until the prime rate actually reaches 8.75% within the next 2 years, the period that you are fixing your interest rate. And also importantly, if it happens, it also means that you will not benefit if the Reserve Bank lowers the interest rate even more, lower than what it currently is, if it reduces the interest rate. And it's also important to understand that in this scenario, the additional amount that you will be paying every month, it will not help you shorten, very importantly, it will not help you shorten your home loan period or save any money in the long run. On the other hand, if you can afford afford the additional 934 Rand, just to use the example, and you use it to reduce the capital portion of your 1 million Rand bond while staying on a variable interest rate. So just to reiterate, so you stay on the variable interest rate, but you pay in the additional 934 Rand, just to use the example. So you pay in every month, you pay in an additional 934 Rand towards your mortgage bond. And that would be a great way to go about, because you will be the one saving. So I would highly recommend that you do that. So you stay on the variable interest rate. So meaning whenever the interest rate changes, so will your interest rate that the bank will charge you. So that extra 934 Rand, you pay it in every month towards your mortgage loan, and that way you will lower the total balance outstanding to 965,000 Rand within a year, and to 928,000 Rand within 2 years, compared to your 952,000 Rand without the extra payment. And the effect of that will be that if the interest rate does reach 8.75% in the next 2 years, to use the same example, your minimum monthly repayment required will still be considerably less than you have been used to paying. And I don't want to bore you with all the numbers here, but it's important that you understand the adverse effect. Because, very importantly, if you do this for 2 years, you will have shortened the total term of your bond by at least 12 months. And importantly so, cut something like 69,000 Rand in interest of the total cost of your home. And please don't hold me to these numbers, but it should give you should be a clear indication on what you could save. And of course, you staying on a variable interest rate right now, it also means that you will still benefit from any further cuts the Reserve Bank may make in the next few months to try stimulate the economy. As I mentioned earlier, in the beginning of this video, the economy is still under a lot of pressure here in South Africa, and I guess it's the case all over the world. The Reserve Bank cutting the interest rate, it is highly unlikely, but it is always a possibility. And if you have an excess bond, very importantly, you will also be able to withdraw any additional amounts paid into your bond account should you need them as an emergency in future. The fact of the matter here is that interest rates, I don't have to tell you, you know that, it will inevitably rise again. It's only a matter of time before interest rates begin to climb once again. So it's always advisable for buyers like you to act sooner rather than later, so that you can benefit fully from the current rock bottom rates for as long as possible. And sellers too, I'd advise you to act quickly in order to tap into today's lively market if you are a seller, because as interest rates increase, demand will slow and sales will become trickier. And we've been there, and you know exactly what I'm talking about. The thing is, we find ourselves in one of those rare situations in the economy in which both buyers and sellers, they stand to benefit from acting quickly. I sincerely hope that what I've shared with you today really made sense to you, and it will help you to make once again an informed decision. And I'm sure that's why you watch my videos. And also, this is one of those videos that you perhaps need to watch more than once, and most definitely share this video with your friends and your colleagues and your family members, and those that you know would be able to benefit from the contents of these videos. And please remember, while you're at it, to subscribe to my channel, to like this video, and to share it, of course. And subscribing, everybody, I'm just reminding you, it is really easy. It is free, it is easy. You can just click that subscribe button in the bottom right hand corner of your screen, and please remember to hit the all notifications, and that way you will be notified and you won't miss out whenever I upload new videos. And also, you don't have to be a novice when it comes to properties. You don't have to. Just go watch my playlists. I've discussed so many. I think this is my 31st video that I'm uploading on this channel. So you have no excuse. Go click on the playlist. I'm going to leave a link to my playlist in the description below. Go click on it, go watch it, and inform yourself. And that will most definitely help you to make informed decisions. Thank you so much, everybody. I'll see you in the next episode. Stay blessed.